If I ask you, what do you believe will be the best performing investments over the next 10 years, let's say, most of you will likely say AI. And this is because we all know that AI is the future, and you're 100% right. AI is the future. But the problem is, because everyone knows that AI is the future, there's an extremely high likelihood that a lot of the future is priced in the current multiple. And you're not going to be getting a bargain if you're investing in AI because everyone else knows that AI is the future. And history has showed us this many, many times. Let's say in the 2000 bubble. Again, I'm not making comparisons very much, but if you believe in 2000 that maybe the internet was the future, everyone knows that stuff. And because everyone knew, and there was optimism, there was FOMO, you overpaid for a lot of stocks like Cisco and many others, but even something like Microsoft. If you bought Microsoft in the 2000, you experienced 16 years of no returns because internet was the future. And you were right, your thesis was right, but you overpaid because everyone else knew that AI was the future or internet is the future. You will most likely experience worse returns than if you invest in something that you believe will perform well that not a lot of people are talking about. And this is what history shows us. And this is what I'm going to share with you in this video. This is an industry or a sector that I believe will be the best performer over the next 10 years and is priced at a very low multiple. No one is talking about it on YouTube. No one is talking about it on mainstream media. I'm invested in this sector and I have 25% of my portfolio in this specific country, in this specific geography. I'm going to tell you what it is here in the video, and I'm going to give you one example of a stock that I believe will be an amazing opportunity to play this trend. And it might seem like a boring industry to a lot of you. A lot of you are going to skip from the first minute or two because you think it's going to be some maybe fancy technology or something like that. But not necessarily. Even a lot of the boring stocks, many, many times, they do outperform the shiny stocks because the shiny stocks are priced to perfection. A lot of the boring stocks, they might have a tailwind, a 10-year or 20-year tailwind that no one is talking about, could do amazingly, amazingly well. And this investment is mainly in Canadian housing construction. I know it's going to sound boring. I hope you're going to give me some time to explain to you what I mean and show you the statistics. Now, a lot of you, if you're not in Canada, or even if you're in Canada, if you have a Twitter account, you likely see all the posts of people hating on the Canadian housing sector because it's really bad. I mean, the sector is overpriced. The housing deficit is huge. You could look at this chart. This is the housing deficit. It hit a record. I mean, just look at this chart. It's really, really bad. Absolutely insane. Massive, massive deficit in terms of housing. There's not a lot of homes being built, and it's extremely unaffordable to live in Canada, mainly from housing. I mean, just a Mickey Mouse house kind of stuff is worth $1 million, $1.5 million. It's like really, a tiny house is worth that much. And it's very unaffordable for people to live there. And it's getting really, really bad. It's getting bad to the point where a lot of politicians, they just have to do something about it. They have to fix it. They can't even get reelected unless they have plans and they're doing something to actually benefit housing construction. And this is why you're starting to see a lot of incentives. This is a new one. It just came out today. Incentive from Ontario. They're going to get $4.7 billion from the Fed over the next 5 years to rebuild infrastructure, rebuild housing, and rebuild many things. And there's way many more programs that have been coming in 2023 and in 2024 to boost constructions. I'm going to show you more statistics, but it's really, really bad. There's a massive, deficit, and home prices are extremely unaffordable. The only way to fix them, and even Justin Trudeau is talking about this, like all the politicians, they know that if they want to get reelected, they have to be doing something about housing. And the only way to fix it is to build more homes and increase supply. And they finally realized that this is what they have to do, and they started to do something about it. Something else that I can show you is it's not only that you have a massive housing deficit, but you have a massive boom in population. Just look at this chart. It's just insane. Massive population boom in Canada because of immigration. They have a lot of migration from Canada. It was the fastest growing G7 in terms of population. You could look at Canada in 2023 in the blue. It outpaced Australia, it outpaced United States, France, Germany. I mean, the population growth over there is huge. So you have a massive deficit, but you also have a massive population growth. I mean, what do you think this is going to lead to? even more unaffordability. And the only way to do something about it and to fix it is to build more homes. So infrastructure in Canada, not just housing, but especially housing and infrastructure in general, is going to be amazing over the next 10 years. A lot of the infrastructure is old. A lot of government programs are coming in to rebuild it, to renew a lot of things, to sustain all this massive population growth that's been happening in Canada. But not a lot of people are talking about this. And if you look at the interest rates in Canada, and I'm not Canadian, by the way, I don't even live in Canada, but I study a lot of those things, and I've been there a few times, and I know a few things over there, and I really like that stuff. And I have 25% of my portfolio in Canadian stocks, and I'm going to tell you why in the end of this video. But if you look at the Canadian interest rate, it recently came down a little bit, but it's at a record high, at least over the last 10 years. So it's very, very high. Now, even though interest rates are around 4.75%, way higher than they were before COVID, okay? If you look at housing starts is still way higher than it was pre-COVID. You look at interest rates are this high. Normally, whenever you have much higher interest rates, housing starts tend to come down. But in this case, even with 5% rates, housing starts were still holding above pre-COVID level, above the average level. Why? Because of the massive incentives that's coming in from the governments to build housing. Now, if housing starts are sustaining themselves so much with 5% interest rates, imagine what's going to happen when interest rates start coming down. This is going to skyrocket in terms of housing starts. And it's just going to be amazing 10-year tailwind, 10-year construction and infrastructure boom in Canada that not a lot of people are talking about. And this is a critical point to get into this sector, because the Bank of Canada was the first one out of the G7 to start cutting interest rate. And this is why I've been buying the Canadian stocks over the last 6 months. I talked about some of them on YouTube. Some of them did well. Some of them did not do well. I'm going to do updates on all of them. But I have like 5 or 6 stocks in my portfolio, around 6 specifically, in Canada. And they're starting to move. My portfolio is up 40%, and these have barely started to move. And there's still time to get in these stocks. And you have the first rate cut down to 4.75. And all these stocks I'm invested in, some software companies, especially more infrastructure and manufacturing and housing, they are critical to interest rates. And Canada does not have the same inflation problem that the United States has. It has a little bit better under control because the economy has been a little bit weaker. And they're starting to cut rates. And they signal more interest rates cuts to come. And this is key. This is when the construction boom is going to happen. And I believe it's going to last over 10 years, maybe 15, 20 years. And the best part about it is, again, these stocks are priced extremely, extremely cheaply. And if you look at just the TSX Venture, I talked about this. It's like the Russell 2000, but for Canada. I mean, they have just really, you could say bad stocks, but they're not bad stocks, mainly small caps, micro caps. This is the kind of stocks I'm invested in, below 100 million, below 500 million, some of them below $1 billion. But you could look at this chart. I mean, they have gone nowhere over the last 10 years. Because Canada did not have the best GDP growth, and they had some population growth, but not as much as they had recently. And if you look at this chart, when population growth started going up, GDP started going up. And I believe this is going to be something that's permanent in Canada, and it's going to happen more often, and the stock market over there is going to boom. And this is why I'm invested 25% of my portfolio in Canada. Now, if you look at the small and micro caps, which is a TSX Venture, you look at what they did from 2020 up to 2021. This index was up 140% after the first rate cut over there, and it's kept coming down. And this is the first rate cut right now. It's just starting to happen. And this is a massive tailwind for construction. You're going to have a deficit in housing that a lot of you know about. And at the same time, you have a massive population boom. And even Canada is planning on bringing in more immigrants, so they want to keep the population boom. So you have population boom, you have a deficit, you have massive population growth way above the G7. You have high interest rates, and the first rate cut just happened like yesterday. And this is the beginning of an amazing trend. And you still have housing starts at record high, or below the average, above the average, I should say, with the interest rates being so high. Now, what's going to happen when they come down? And there's a lot of ways to invest in this sector and to play this. And I'm sure you could find a lot of stocks on your own, like Canadian construction, Canadian single family, Canadian housing or something. I'm sure you could find a lot of things on your own. But there's one stock I shared before. It's still cheap, and I'm sharing it again. I talked about it at $19. My cost basis is $17. I'm up like 38% on it. And there's way more upside. The stock is still cheap. And this is what I wrote on Twitter. This is as of recently. This is recent metrics. This is a company that's not only involved in single family and multifamily construction, but it's also involved in critical infrastructure, in renewing the utility stuff for Canada, where they've been renewing a lot of the electricals, building trains, building different things. Nuclear energy, they build the nuclear stuff for Canada. They do many different specialties that not a lot of people and not a lot of companies can actually do. And this is a company that's still trading at a 10% free cash flow yield, 11 times earnings. Last quarter, they grew EPS 100%. You could look it up. They grew 100%. Backlogs that will last them into 2026, $1 billion in recurring revenue. And you have Canada starting to cut interest rate, which is going to fuel construction. And I talked about this one in my video of 2 stocks I have with massive upside potential or something like that. You could check it out. But this is one way to play the construction boom in Canada. I have 6 stocks in Canada. Like 3 of them are around construction and single family stuff. You could join my group if you're interested in investing in this trend with me. We have a lot of different stuff in this area and they barely started to play out. But I personally believe the best time to get in is now, because you have the trend reversing, you have interest rates starting to come down, and you have all these tailwinds from population growth to a massive deficit, and it just couldn't be better. It's an amazing investment. And again, you're going to laugh at me, but I believe this sector will outperform AI over the next 10 years because you have massive growth coming in, massive tailwind from an industry that was dead. It's now coming alive. You could look at the 2-year chart of Bird Construction. It's been coming alive and it's going to continue for the next 10 to 15 years. But the best part is that you don't hear about this investment on YouTube. You don't hear about it on the news, which means we're likely getting a bargain. We might be first. A lot of these stocks that I own are 100 million, 70 million market cap. Once they get larger and larger, the funds can buy them. And then they're going to play the industry boom in Canada. They cannot do it right now because these stocks are too small. So in many ways, if you invest in a lot of those stocks, even Bird Construction is a little bit higher, you're still ahead of a lot of people that don't really know about this investment because everyone is focused on AI. They forgot everything else. But we know what history tells us, not just in the dot-com bubble, but also in 2021, whenever people said EVs were the future. If you bought Tesla back then, you're still down 20% because everyone else knew that, which means it was most likely factored in the price. And this is my honest opinion on the AI stuff and what I personally believe will be the best investment over the next 10 years. And I have my money where my mouth is. But thank you again very much for watching the video. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.